Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So I want to start today with one of the best charts I've seen coming from somebody who wasn't me in a long time. This is from Joe Boo something on Twitter and TradingView. I'll link him up in the description. But basically what he's highlighting is repeated inverted head and shoulders, supply and demand shocks, and where we currently are is kind of in one of the shoulders of a very big potential head and shoulders. Now, I've seen this chart before, I've talked about it and posted it before. The reason it's worth talking about again is because we're getting close to completion on this pattern. You may have seen the head and shoulders drawn a few different ways. There's also like a diagonal version you can sort of finagle. But if you measure this out, I got somewhere around 1300 as a target. Basically, if you take the bottom of the head to the neckline and then just extend that up, you get somewhere around 1300. Unless I'm wrong. Sounds good to me. So again, it's worth knowing, even if you disagree with all of this stuff, it's worth knowing that this is out there and this is something you may or may not want to pay attention to. If you don't know what supply and demand shocks are, just Google it. Yeah, so that's a great chart. Next, I want to talk about just weekly cloud again. Just going to talk about cloud in this video. So again, we're out of the cloud. Bullish. Price is above the cloud. TK cross is bullish. Cloud at the Kumo is bullish. And lagging span is technically above the cloud and above the price. All systems go. Put on RSI as well, showing you that there's plenty of room for up. Now, if we get a higher high in price, but not a higher high in RSI, there is some concern that that will form a massive bear div, which would mean bull strength, bull momentum is weakening, and a hard retrace would occur after that. So that's something worth paying attention to. Not right now, but as it happens. So forecasting that. I'll be paying very close attention to weekly RSI. Now, you won't necessarily know where the RSI is until weekly close, so the bull bear div might play itself out before then. I don't know, we'll see what happens, but basically if it's not above 85 on this next stab up, should we get a higher high, which I think we will, then I think there's going to be a massive bear pullback, maybe even to this 2900 level, but we'll see. So let's take a look at 4 hour. Had these out of order, sorry. So this is daily stamp. I tweeted this the other day, got a lot of traction. And again, I'm looking at RSI, I'm looking at Pitchfork. I'm trying to forecast the top by saying, let's bring this fractal over here. The top shouldn't get much higher than the upper limit of this pitchfork. So I can say that for certainty without even using a fractal, but this is just sort of a visual representation of that. So I'm saying if we break out of this fractal pitchfork above, this far above, that says we're way overbought. Pretty interesting that here's this 1300 number again, based on that fractal. The other thing I'm saying is, last time we were in the lower quartile, we were there for 35 days. This is now in 27 days. So this says to me that there isn't a lot of time left in this zone if it acts the same way it did before. And then again with the RSI, I'm looking at previous RSI, what happened, where we have the ramp like we did before. So I'm saying watch for a double top on the RSI. Just like before, again, you can look at what happened before. It's never going to be identical, but it's might be close. You never know. Here you can see we got outside the pitchfork and we pulled back. So again, pitchfork seems pretty reliable. We also bounced from almost exactly and this is the Bitfinex hack dump. So again, pretty interesting. That tells me, like I've been saying in a bunch of other videos, that these aren't just arbitrary diagonal lines. These are lines that mean something to enough people that they sort of hold water as far as support resistance is concerned. If we look at the daily cloud, I also tweeted this out yesterday. Basically, I'm comparing these Kumo breakouts, and I'm saying we had a Kumo breakout here, but not all cylinders were firing bullish. Basically, we didn't have the lagging span above cloud and above price. And I only ever use lagging span when I'm checking the cylinders of the bullish checklist, because otherwise it's just too many lines on the chart, and it's too confusing. But all it is just 30 periods back price. So it's the current price 30 periods back. So all it's saying is price higher than it was 30 periods ago? Is it higher than it was? The cloud is 30 periods ahead. So I don't know how to say that, but it's kind of like the cloud's 30 periods ahead, the lagging span's 30 periods behind. So is the current price higher than basically 60 periods ago? I think that what that works out to be. But anyway, so I'm saying these two Kumo breakouts were not created equally. One of these is more bullish. This one, the current Kumo breakout, more bullish. And if you don't know what a Kumo breakout is, it's a candle close above or below the cloud. So here we have the Kumo breakout. We have some dipping into the cloud here, not uncommon. And then we have blast off. Lagging span above cloud, above price. And it was sort of above cloud and price here. So again, this is kind of questionable as far as the lagging span use is concerned. And is the cloud bullish? It's almost bullish. When that twists bullish, I think it's going to be good enough for a move. It's been over 6 days since the last big margin call on OKCoin futures based on whale calls, tweets. So I think we're due this week for sure for something. I think it's going to be up. I think it's going to be between 45 and 4,700. And let me show you why. So here's 4 hour. 4 hour looks like an ascending triangle to me. Call it a flag, call it whatever you want. I think it's ultimately a bullish continuation pattern. RSI is sort of resetting. Some people might read this as like a waning bullish momentum. I just see it as resetting. It didn't go below 50. Which, per my own rule, is sort of says that's a reset versus a reversal. I really like 2 hour cloud. I tweeted about this the other day because it captures, or has captured, this entire trend. I normally look at 1 hour, but 1 hour looked a little too busy. So basically, when I'm deciding on which time frame to watch the trend on, I just look for whichever cloud makes the most sense. So if you flip to the hourly, it goes bullish and bearish. So something else I noticed, we keep getting these taps of the Kijun on the 2 hour. So that's again telling me continuation over reversal. TK is still bullish. Blue over red is bullish. Blue is the faster EMA and red is the slower EMA. You can just think of it like that. If we get a cross-recross of the TK lines, that's also bullish. That kind of happened here. I don't know, it's kind of too busy to tell. You can sort of see an example of that here where we get a cross of the TK lines and then a recross bullish above the cloud. When you get a cross above or below the cloud of the TK, that is the most bullish or bearish sign that there is that you can get. So look for those especially. So what I'm saying here is here's the ascending triangle, flag, whatever you want to call it. And if we break down, it's going to go 4,200-ish. Again, this is the edge-to-edge cloud thing. I don't think it'll do that because that sort of violates the monthly pivot on the R1. We'll see how well that holds up. It's held up pretty well so far. I think the next move up, again, 45 to 4,700. If you fib out this move, you get a fib extension around 4,500. You've got the R2 at 4,500, so I think there's plenty of resistance. There's also some horizontal resistance that you can't see, but if you scroll back at 45 to 4,700, you can see that. So that's all I have for today. If you have any questions, let me know. Hit me up on Instagram, Telegram, Twitter. As always, like, dislike, share, and comment. Happy trading.